Forex alert. New shift in Iraqi Dinar rate. Is now the moment to profit. Forex news 2025 Iraqi Dinar with your channel intro for RV News. Welcome back to RV News, your trusted source for real-time updates, exclusive insights, and in-depth analysis of the Iraqi Dinar, Vietnamese Dong, and other revaluation news that matters to you. If you're an investor, currency enthusiast, or someone simply looking for that edge in the evolving world of global currencies, you're in the right place. Be sure to hit that like button, subscribe, and turn on the notification bell so you never miss a single update. Today's report is one you can't afford to miss. A seismic shift has just occurred in the Iraqi Dinar exchange rate and is sending ripples throughout the global Forex market. Whether you've been holding IQD for years or are considering getting in now, this could be the moment you've been waiting for. So let's dive into the developments rocking the financial world. As of early June 2025, credible sources within both international banking networks and foreign exchange monitoring agencies have detected a notable fluctuation in the value of the Iraqi Dinar IQD. After months of relative stability and some speculation that revaluation talk had gone silent, the tables have dramatically turned. Multiple indicators now confirm that a significant recalibration of the dinar has taken place, pushing its market value higher than it's been in over a decade. This isn't just a minor uptick, it's a carefully calculated shift, one believed to be guided by coordinated efforts between Iraq's central bank, the International Monetary Fund, IMF, and several private banking conglomerates across the Gulf and Europe. So what exactly has changed in the Iraqi dinar rate and why now? Over the past few weeks, the Central Bank of Iraq has been tightening its monetary policy in an effort to stabilize the national economy. Inflation, which had been rising steadily due to a combination of regional instability and oil market fluctuations, was finally brought under control through strict fiscal measures. The CBI's aggressive move to increase foreign reserves and its decision to limit the auctioning of US dollars have played a crucial role in reducing dependency on the dollar. As a result, demand for the local currency began to climb. This momentum was further boosted by growing investor confidence. In April and May, Iraq signed several new oil and infrastructure contracts with international firms, notably from China, Russia, and Germany. These deals are expected to inject billions into the economy, prompting foreign investors to acquire more IQD in preparation for upcoming transactions. It's simple economics. Higher demand with a limited supply equals a stronger currency. And that's precisely what we're seeing now. This strengthening of the Iraqi dinar was first reflected in regional Forex platforms and unofficial street market rates in Baghdad and Erbil. Reports from currency traders revealed that the IQD was trading significantly above the official central bank rate in some instances. This discrepancy led analysts to believe that a formal adjustment was on the horizon. And sure enough, on June 1st, 2025, the CBI quietly introduced a new baseline rate, one that valued the IQD at approximately 900 to 1 USD, compared to the long-standing rate of around 1,310. This is a substantial leap, signaling not just a currency adjustment, but the possible first wave of a broader revaluation effort. Many in the Forex and RV community are now wondering, is this the moment to profit? The answer depends on your timing and understanding of market signals. One thing is clear, opportunity exists, but it favors the prepared. Historically, currency revaluations have unfolded in stages. Governments rarely allow massive rate changes overnight due to inflationary risks and political backlash. Instead, they proceed incrementally to manage market reactions. With this recent shift, we may be witnessing the first phase of a multi-tiered revaluation plan aimed at bringing the Shia IQD closer to its pre-2003 levels when it held significant value in the global economy. Adding more fuel to the fire, several global banks, particularly in Europe and the Middle East, have updated their internal IQD exchange rate sheets. Leaked documentation from a London-based institutional trading desk reveals that two private banks are now offering provisional rates between 0.0121 and 0.0134 USD per IQD for large volume contracts. While these rates have not yet been made public, for retail customers, they signal a dramatic upward trend. In comparison, just 6 months ago, the IQD was effectively considered a non-convertible currency by most Forex platforms. This newfound attention from international banking circles represents a major pivot. But where is this all going? To answer that, we need to look at the geopolitical context. Iraq is now at a turning point in its post-war recovery. For years, it was seen primarily as a fragile state, crippled by corruption, conflict, and dependency on U.S. and international support. But over the last 24 months, there's been a consistent shift. Iraq has implemented a range of economic reforms under IMF supervision aimed at reducing government spending, increasing private sector participation, and streamlining banking regulations. These measures have significantly improved the country's sovereign credit outlook and reduced capital flight. Moreover, Iraq's gold and foreign currency reserves have reached record highs in early 2025, currently estimated at over 110 billion. This has given the CBI the breathing room needed to float, adjust, or even repeg the dinar without jeopardizing monetary stability. In fact, there's talk within regional financial circles that Iraq may soon link the dinar to a basket of currencies, possibly including the Chinese yuan, euro, and Saudi rial, rather than just the US dollar. Such a move would insulate the IQD from dollar fluctuations and create more resilience in the long term. Now, back to the question on everyone's mind. Should you act now? If history teaches us anything, early movers tend to benefit the most. Those who invested in the Kuwaiti dinar prior to its post-war restoration saw returns multiply in a short period. Could we be seeing a similar trajectory for the IQD? Possibly. However, it's essential to proceed with strategy and not speculation. The key is to monitor the indicators: foreign direct investment trends, oil export revenues, IMF statements, and most importantly, the daily bulletins from the CBI and major Forex brokers. Also worth noting is the activity around redemption. Centers, yes, those elusive facilities long rumored in the RV community, are reportedly gearing up for something big. While there's no official confirmation from government channels, multiple insider sources have hinted that logistical preparations have been made to handle larger than usual IQD exchanges. Security contracts have been signed, staff have been trained, and private NDA-based appointments are reportedly being scheduled in select locations across the US and Europe. While much of this remains shrouded in secrecy, the timing is more than just a coincidence. Adding to the intrigue is the behavior of certain wealth management firms and private currency brokers. Some have paused IQD sales temporarily, citing inventory shortages and rising wholesale costs. Others have begun issuing advisory notices to their clients, warning of rapid shifts in rate availability and urging holders to update their KYC and AML documentation. These moves suggest they expect an increase in redemption or exchange activity in the near future. Meanwhile, the mainstream media has yet to catch up. Aside from a few mentions in financial newsletters and Forex commentary blogs, the larger economic press has largely ignored the dinar's recent rally. But that may be a blessing in disguise for early investors. Historically, mass media tends to enter the conversation after the first major wave has already passed. For those of you watching RV News, you're getting this intel while the market is still forming, and that's a rare opportunity. We should also consider what this means for Iraq's regional relationships. With Iran facing increasing international pressure and Turkey dealing with inflation woes of its own, Iraq has emerged as a relatively stable alternative for Middle Eastern investment. Gulf states, particularly the UAE and Saudi Arabia, have started pouring money into Iraqi real estate, oil production, and banking projects. These capital inflows are strengthening the IQD and reducing volatility. There's even talk of Iraq playing a greater role in OPEC decision-making, especially as its oil production becomes more vital to global supply chains. In addition, the political landscape in Iraq has grown more conducive to economic stability. Following last year's elections, a coalition government with pro-reform priorities has taken power. Prime Minister al-Sudani's administration has pushed forward several anti-corruption bills, increased transparency in oil revenue distribution, and re-engaged with Western institutions like the World Bank on UNDP. This progress has boosted international trust, which is vital when you're trying to restore a currency's credibility on the global stage. To bring it all back to you, the viewer, the investor, the believer in the RV journey, the current shift in the IQD rate may be your signal to start preparing seriously. Whether that means organizing your currency holdings, researching compliant exchange outlets, or speaking to a financial advisor, now is not the time to sit back. The window of opportunity may be narrow, and those who hesitate could miss out on the most profitable wave. Keep your eyes on cross-platform confirmation. Watch how Forex charts, bank memos,